Hi, Dr. Dolly. Thanks for all that you do and for taking this question. I'm a primary care doc, 2 years out of training and with a modest but steadily growing portfolio. About 5 years ago, my wife and I put together a written investment plan predicated on an 80-20 asset allocation with indexing as the backbone. Each mercifully small digression from the plan has been an excellent learning opportunity, like that time I bought airline stock right before a pandemic. Turns out failure is a great teacher. As an avid reader of your blog and listener to the podcast, it seems that many of the questions posed have the same flavor of answer, something to the tune of, what does your investment plan say? As a young investor, I would be curious to know, however, what set of circumstances, if any, would prompt you to lose faith in long-term market returns and amend or edit your written investment plan. Again, thank you for all that you do.
Okay, that's really two different questions. You're asking what circumstances would cause me to lose faith in the long-term markets and what circumstances would cause me to amend my investment plan. And that's really, a good demonstration of why staying the course is so hard, because you're always faced with this question. Is it different this time? Should I bail out? Should I change my plan in reaction to the market conditions? And usually changing your plan, assuming it was a sensible, reasonable, well thought out plan, is a mistake. What usually happens is you're really chasing performance and you change your asset allocation just in time for the lagging asset class to finally start outperforming. And if you haven't had that happen to you in your life, you probably haven't been investing very long. It happens very, very frequently. So let's take that first question. What circumstances would cause me to lose faith in long-term market returns? Well, a zombie apocalypse. Let's say instead of COVID killing 1% of the population, it's killing 80% of the population. That's probably going to affect the economy enough that your long-term returns are not going to be very good. That would cause me to lose some faith in long-term market returns. What else? Nuclear war would probably cause me to lose some faith in long-term returns for similar reasons. But here's the truth of the matter. These extreme circumstances, they're going to cause you to have poor long-term, and by long-term, I'm talking 30, 40, 50 years, my investment horizon, we're talking about things that will cause a long-term poor return. These are terrible things. They are awful circumstances that will cause you to, just be grateful that you're still alive and have something to eat. The last thing you're going to be worried about is going to be how the market did. Right? So these are the sorts of things that I would worry about as far as long-term market returns. Bill Bernstein talked about the four risks, the four horsemen of the apocalypse. He talked about inflation, which is obviously the most common, but he was really talking about hyperinflation, like you've seen in Zimbabwe. Deflation, basically the economic collapse we saw during the Great Depression. Confiscation, which is when the government comes in and takes everything. Think about Russia in 1918. And devastation, when the economy is just destroyed, like Germany in 1945. And those are the things that cause poor long-term returns. They cause, relative, that's the real risk in your life. He calls it deep risk, as opposed to volatility, which he calls shallow risk. And the truth about volatility is if you just hold on long enough, volatility comes back. And that's what we often see when the markets are going up and down and people are panicking and trying to time the market and all that. That's just volatility. That's not actually real risk showing up. Real risk are those four factors that can show up from time to time in the history of the world. And so I think that's really a good explanation of things to keep an eye out for as far as losing faith in your long-term market returns. Outside of that, other things don't cause me to lose faith. An election certainly doesn't cause me to lose faith. Changes in interest rates don't cause me to lose faith. World economic events or world political events, these sorts of things are par for the course. You should expect the market to go down 10% about once a year. You should expect the market to go down 20% or more about every 3 years. These are expected events. They shouldn't cause you to panic and change your investment plan. Okay, so what would cause me to amend my investment plan outside of a zombie apocalypse? Well, personal changes in my life. For example, if you end up acquiring more money than you thought you were going to make, you get a big inheritance, you get a big windfall of some kind, you end up reaching financial independence earlier than you thought. These are reasons you might amend your investment plan. You've reached your goals. Maybe you need to take less risk with your portfolio in that sort of a situation. But in general, valuations of one asset class against another, those change over time. And that's not something that I would necessarily change my asset allocation for. I hope that's helpful and answered the question, Brendan. If you want your questions answered by the White Coat Investor, record your question at whitecoatinvestor.com/YQA or click the link in the description.